and we're talking Main Street and the small business lenders who help it grow. Thank you to this week's sponsor, a new sponsor for Coleman Report Update, Business Finance Capital.
At BFC, we specialize in the SBA 504 program. This program allows small businesses to gain 90% financing when they're purchasing real estate. The SBA rate is fixed and amortized over 20 years, which is great for business owners because they don't know where interest rates are going to be going over the next 2, 3, 10 years. So it's really a rewarding feeling to be able to help people who are working in their garage or renting at a really high rate to be able to own their building, gain some equity, and have something to show for their company.
This week's top story, appraisal limits. Back in April, the FDIC increased the threshold that lenders need to get an appraisal in commercial real estate from $250,000 to $500,000. The problem is SBA is stuck at $250,000. Legislation has been introduced that will raise that. Listen to the conversation Lance Sexton and I had.
We mentioned this in the poll question, that currently what the regulations are, if you have a loan, SBA 504 or 7A, you have to get an appraisal of anything over $250,000. That's in the SOP. The problem is, or the challenge is, the regulators have increased that. The FDIC has increased it. Now, hey, $500,000, you can, dealer's choice, you can do it or not. But there's a mismatch between FDIC and SBA. Legislation was introduced this week that will now match what the regulators do and what SBA requires.
Well, and I think it's important that the rules are consistent, Bob, between your regulator and SBA. But again, just as we talked about before, just because suddenly the rule says you don't have to do an appraisal on a $400,000 commercial real estate transaction doesn't necessarily mean that it's prudent lending to not do it. And again, as we all know, commercial lending policy of your institution is going to dictate what you do in this appraisal circumstance.
For one of the larger Wall Street banks, the Wells Fargo, Bank of America, they may choose to adopt this. But if you're a smaller credit union or community bank, which I know a lot of you work with, you may say no, as Lance was saying. I still want to get that appraisal or for anything at X amount of dollars, because it's a much higher risk to you than it is for some of these larger Wall Street banks.
I love telling stories about Main Street Optimism. Listen to what Lance Sexton and I had to say about a survey from manufacturers.
And just these are the stats, and I'm a stats guy, and all-time high for manufacturers. Now, to be fair, this is from the National Association of Manufacturers, so we're talking small business as well as medium and larger businesses. But Lance, these numbers are so much better than they were 10 years ago when you and I were doing this. First of all, you got to look at the top. 95% of business outlook is positive, and that's a great stat. And sales, they anticipate, this is over the next 12 months, increase by 6%. They're going to increase employment. They're increasing capital investment, i.e. code for they're going to borrow money. They're going to increase their prices. Inventories, wages are going to go up. Their exports, everything. Well, and then the bottom, and the sort of the nasty one is health insurance. They say is going to go up by 8%. But those are awesome stats, Lance.
Absolutely. And Bob, just a personal experience. Manufacturing as a part of my SBA portfolio had declined pretty significantly. The great thing, guys, is my last 3 loan closings were all manufacturers. I'm starting to see more small to medium-sized manufacturers looking at expanding. And it's not a trend yet, Bob, but, not only have the last couple closings been manufacturers, but I have 2 new projects in the door that are both manufacturing companies. And, I have went an entire year in SBA lending without doing a single manufacturing loan. So, I don't know if that, I think manufacturing's on an uptick in America.
Lance repeatedly stresses diversity in your loan portfolio. He mentioned hotels. Why are hotels getting scrutiny? Because there's a high level of concentration buy SBA 7A and 504 lendings in that niche. It's the number 2 niche behind restaurants. So manufacturing is a great way to diversify your loan portfolio.
And Bob, you bring up something that's great, and I had this conversation with my boss, and she's been in the SBA lending game for a long time, and I love the conversation because we were talking about diversity in your SBA loan portfolio, and I'll just repeat it real quickly. You need diversity in loan size. You don't need all $2 million plus loans. You need some 50s and 100s and 250s. You need diversity in NAICS code. You know, I know some people approach vertical markets, but if you're going to approach a vertical market, you need several vertical markets that you're lending to. But you need also some diversity in method of processing. You don't want 100% of your loans to be PLP. You want some PLP, some express, and you need to occasionally submit one GP.
Hey, Lance, why do you say that, Lance?
I think, you know, my philosophy on that, Bob, is and if you talk to somebody from SBA and you're a PLP lender, they're going to encourage you to do everything you can PLP. And certainly it takes pressure off of SBA from processing. But it's hard for me to believe that a good participant lender doesn't get a project. And Bob, you and I on numerous webinars have said, yeah, this one's a little strange. I do it GP. And that's exactly what I'm getting at. If you're a good SBA lending institution, you're going to see a project where even your strongest SBA person is going to look at it and say, you know, it's kind of a gray area. Those need to go GP.
And the reason why you want to send something GP is if you have a question about eligibility. There's a nuance in there. And once SBA signs off on a GP, they are signing off that this is an eligible small business for SBA 7A or 504 financing.
Well, and Bob, you know, I've talked about guarantees being paid, and when I was at SBA, the statistic was in the 92% range, and it still is. SBA pays on over 90% of all guarantee purchases submitted. But the one thing that will get the guarantee pulled out from under you is doing an ineligible loan. So if you're a PLP lender and you say, yeah, it's eligible, do it PLP. But if you're a PLP lender and you question eligibility, submit it GP.
Part of our series about America West profiles, Suzy Granger, DRDA. Suzy Granger, DRDA Business CPA Consultants. You are an expert in a very interesting niche in our industry. Tell us about it.
I provide a structure that allows borrowers to access their retirement funds tax and penalty free if they're using it to buy or start an active business.
What's this cost?
It costs $5,000 to put the program together turnkey. It's going to cost the client $1,600 a year to keep it compliant.
And you can take this and use this as the equity injection and piggyback it with a 7A or 504 loan. How many of these transactions have you done?
About 5,000.
Give us a typical transaction without naming names, but tell about one that you've done.
All right, so I'm working on right now. I've got a husband and a wife. They want to buy a daycare. They're buying the real estate and the business. The husband is retiring from Boeing. He's coming out with $400,000 in his 401k. Now that he's retiring from Boeing, those funds are available. He'll be able to roll them into this structure, which will result in $400,000 being in his corporate checking account as working capital, which he can leverage against a 7A or 504 loan.
And no penalty, correct?
No tax, no penalty, regardless of age.
Suzy, one of the main criticisms, I shouldn't say main criticism, one of the criticisms of the program is, hey, you were playing with people's retirement funds. How do you respond to that?
Right now, people's retirement funds are being invested in somebody else's business where they have absolutely no control. My entrepreneur is allowed to invest in his own business where he has all the control.
Suzy, thank you so much.
Thank you, Bob. Appreciate it.
I love running stories about small business success stories. Here's a customer profile from our new sponsor, Business Finance Capital.
I'm Victor Beauchamp, and I'm General Manager of Hotel Royal. The history of Hotel Royal was built in 1923. It was actually built for oil workers. There was a huge oil boom in Long Beach. After that, there was a Navy base in Long Beach, and this hotel and 4 others like it served the Navy. In the 70s and 80s, Long Beach fell on hard times, and this became, for lack of a better word, a flop house. And then we purchased it in 2003 with the hopes of turning it into a boutique hotel. We were laughed out of every single bank that we brought it to. 14 years later, we got it done. And now it's a boutique hotel, the highest rated hotel in Long Beach. What Hotel Royal offers is a unique experience for our guests who are tired of staying in a chain, right? If the same hotel you stay in Texas is the same in California. We are in a vibrant East Village Arts District. The guests who come here want to experience that. We provide something different. So it's a 1923 Art Deco building, family run. Each room is uniquely decorated. We try to provide a home away from home. Our goals for the 504 loan were to pay for the renovations that we had already done. Back when we started, no bank was interested in financing a boutique hotel in Long Beach. Nobody believed it. So we went with hard money, very high interest rates, but we got it done. Once it was completed, we needed to get a more stable interest rate. We went to the SBA 504 for that. Working with BFC was a truly unique experience. It was like the combination of working with a Wall Street bank and their professionalism, but with the compassion of a nonprofit. It's funny, the way we found BFC, we had actually worked with another CDC for several months. We found them to be unresponsive. So I went back to the website, reached out to all the CDCs that were in our area. This was on a Sunday night. BFC's CEO reached out to me on a Sunday night and said, "We are very interested." The next day, their representative was here and spent 5 hours touring the property and going through our financials. It sort of buoyed our spirits and kind of got us excited again and got us to believe. And I honestly feel like without BFC, there's no way that any of this happens. And that's sincere, like that's really true. Any business that's considering a 504, go to BFC. Do not pass go, that's the first step that you need to take. Let BFC lead you through the way. If I had to summarize my experience working with BFC in a single word, it would be extraordinary.
And finally, I had to run this clip from Alabama Small Business Development Center. Enjoy.
All my animal family at the Alabama Gulf Coast Zoo just love the Alabama Small Business Development Center because they helped us build our new home. Come see us in 2020.
Thank you for joining us today for the Coleman Report Update in supporting America's Main Street and zoos, one entrepreneur at a time.